Market participants remain cautious. The CME FedWatch Tool shows a 35% chance of a Fed rate hike in November, uncertain the pair's direction. The AUDUSD enjoyed a good uptick in Thursday's session, supported by solid economic data from the United States, US, despite a solid Aussies jobs report. However, the pair ended with gains of 0.28%, and as the Asian session began, it exchanges hands at 0.6436, registering minuscule losses of 0.05%. The economy in the U.S. remains resilient, as shown by the latest week's figures, with consumer inflation climbing as expected, which would keep the Federal Reserve vigilant of upcoming economic developments. Thursday's data revealed that August's Producer Price Index, PPI, jumped by 0.7% MOM and 1.6% YoY, exceeding the consensus, while retail sales grew by 0.6% MOM, above estimates of 0.2%. In other data, the labor market remains tight, as revealed by initial jobless claims for the last week, showing 220,000 people filed for unemployment insurance, below the street's consensus of 225,000. Although the data supports another rate hike by the Fed, market participants remain hesitant to adopt a stance, as shown by the CME FedWatch Tool. Odds for a 25 bits per second rate hike by the Fed peaked at around 35% for the November meeting, but it's too early to declare victory. Given that data remained volatile during the last 2 months, the Fed would have to dig into additional data before deciding the best path of monetary policy. Regarding the released data in the U.S., ANZ analysts expect no more hikes by the Fed. They wrote, "Our view is the Fed is done with its tightening cycle, but risks remain that further rises may be needed. We continue to see Fed policy as highly data-dependent, at the same time patient, with most officials open to further rate hikes if appropriate." Aside from this, employment data in Australia was solid and spurred a leg up in the AUD-USD pair during Thursday's Asian session, reversed with the U.S. economic data release. The Aussie economy created 64,900 jobs while the unemployment rate remained at 3.7%. Even though more jobs were added than foreseen, ANZ analysts noted that they expect the Reserve Bank of Australia, RBA, to hold rates unchanged at 4.10%. Therefore, if the RBA is set to keep rates unchanged and the Fed maintains its options open, additional AUD-USD downside could be expected, with interest rates favoring the greenback, USD. Given the fundamental backdrop, from a technical standpoint, the pair could be testing the year-to-date, YTD, low of 0.6357. A breach of the latter would expose key last year's support levels at a November 22 low of 0.6272, followed by the October 21 swing low at 0.6210.